Smokers, guys, it was another crazy day out there in the stock market today. We had a lot of stocks making a lot of big moves out there, and I want to talk about some of these stocks here today. By the way, who was on that crazy live stream earlier? I know some of you guys were, all right? So some of the stocks I want to talk about here today are Square stock, okay? Ticker symbol SQ. This one has been super hot, and it took a big hit today, down over $8 a share, down 8.5%. We want to talk about Irobot, ticker symbol IRBT. That one fell over $9 per share, about 8.5%. Tesla shares fell another 4+% today. It's down around its 52-week low now. The Tesla stock has just been nailed. We're going to talk about why that one's down. And then NIO stock took another 3+% dive again here today. Remember that one was called the Tesla of China, okay? So we're going to talk about all these stocks, why they ended up dipping today. Hit a thumbs up if you enjoy this, guys. So first off, let's talk about Square, all right? So Square is starting to act more like a traditional bank, and one analyst went ahead and downgraded them pretty big today on some what he calls credit risk out there, all right? The company's shares moved down huge on this, as we saw. The market, this is coming from the analyst now, the market appears to be overlooking any risk to the company's business model and credit risk in particular. Palmer said in a note to clients on Monday, our bearish thesis on Square is predicted in part on our view that the company's increasing dependence on the extension of credit to its customers to spur its growth, increasingly vulnerable to volatility in the credit markets, he says, okay? Last week, Square Capital launched Square Installments to let users charge for big purchases by splitting them into smaller fixed monthly payments. Square takes on that loan, and the customer buying the product pays it back in either 3, 6, or 12-month periods. The new offering is likely to increase this vulnerability, the analyst says, all right? BTIG, which is where this analyst works, has a sell rating on the stock. The stock's obviously up over 200% this year. It's had an amazing year, but this analyst believes it's going to go to around $30 a share, all right? That's like a 60+% downward move there. Absolutely massive move down, all right? And so his basically huge worry out there is he says this is a company that obviously is trading at an unbelievably high valuation. However, he believes that a lot of this company's growth is on the back of basically giving out some risky loans. And basically right now, a lot of people are employed, you know, the economy's good, things like that. But what happens when the economy's not good? What happens when, you know, people start losing their jobs, which eventually will come. We don't know when that is. It could be a year from now, 2 years from now, 5 years from now. It will happen eventually someday. What he is basically saying is this company has a massive valuation on it, and no one is thinking about the risk to this company whenever the cards come crumbling down once again, okay? And what he's saying is when those people stop paying those payments, right, this company is going to be at a massive financial jeopardy. And so this is why he believes this company should be trading at a much lower valuation than where it's currently trading at, because of the risk. You can always look at the banking sector, you know, traditional banks. They all trade at much lower valuations than what they might have historically traded at, mainly because there's honestly a lot of people saw what happened in the recession. They saw how those companies got absolutely killed, had to end up being saved and whatnot. And the way this gentleman's looking at it is he's saying a company like Square, if they were in big financial jeopardy, they're at a stage where they're not big enough to really matter that much right now. So the government might just let them go under, okay? Let's say the economy is totally weak. Let's say this company has a massive credit risk. Let's say, you know, the company also starts to lose hundreds of millions of dollars or billions of dollars on these credit loans, and the company's at a jeopardy of maybe going bankrupt or filing for bankruptcy or something. You know, it could be possible the government will say, oh, who cares about them? They're not Wells Fargo. They're not Bank of America. They're not Goldman Sachs or JP Morgan or any of those banks. They're not big enough to really matter. So it definitely should be a risk that is thought about if you own a company like Square stock. PayPal also fell on this news. We know a lot of those companies are trying to get into the almost like banking business to a certain extent. Now that people have, you know, their phones and whatnot, and a lot of people are looking at it as, do I really need a traditional bank account through Wells Fargo or Chase or Bank of America? Maybe I can just use Square. Maybe I can just use PayPal full time or something like that. So these companies are getting into that business. This guy's saying, hey, watch out. They're going to have some big credit risk down the road. So we'll have to see what happens with that. If you guys have an opinion, let me know in that comment section. Next up here, let's talk about Irobot. So if you didn't know, Irobot makes the Roomba vacuum cleaner. This analyst came out and downgraded them big today from Piper Jaffray. He says Irobot will suffer from the latest escalation in the trade conflict between the US and China. The firm lowered its rating to neutral from overweight for Irobot shares, predicting trade tariffs will hurt the company's business next year. The analyst says we have become increasingly more concerned with the stock's valuation, given the outperformance experienced in 2018, coupled with the recently implemented trade tariffs, the analyst said in a note to clients on Monday. We believe the recently implemented trade tariffs for robotic vacuums will have a negative impact on iRobot's guidance for 2019, he's saying, okay? Jensen maintained his $90 price target for the company stock, representing 15% downside from Friday's closing price, although that's much closer to $90 now. The analyst said iRobot uses contract manufacturers based in China, and they'll be hit by the tariffs. That is true. All right, the tariffs already are now at a 10% rate. This will go to 25% by January 1st. He says, we believe iRobot will likely pass these price increases on to consumers, but this could lead to lower growth given the higher price points. If iRobot doesn't do that, then basically the margins will shrink and, will be a much less profitable business. So he's basically saying that they're in a no-win situation. iRobot's in a no-win situation. They can either up prices big time, which we already know their latest vacuum cleaner is like nearly $1,000 that they came out with, right? He says they could, up the prices big time, and maybe that will slow down a lot of their revenue growth because a lot of customers will say, well, this vacuum cleaner that only has this feature and that feature is now all of a sudden $600, and this one over here $700. Maybe we don't want to buy that, okay? They could do that, and maybe they get less sales, or they could say, you know what? Let's just take the hit on this. Let's lower our margins. And all of a sudden, the company's profitability is not very, nearly as impressive as it could be, okay? So he's saying iRobot's pretty much in a situation where it's a no-win situation right now, and the company has a fairly high valuation on it right now. We'll have to see what happens with that. Let me know if you guys got an opinion on iRobot down there. I would love to hear from you. All right, guys, now let's talk about Tesla, right? People are like, when is Tesla going to stop falling? Obviously, the day the whole news came out about Tesla might go private, that was, what was that, probably like 2 months ago now? Stock was at nearly $390 on that day, and now it's at $250. And people are like, why is this continuing to go down? Well, there's some more scary news, I guess you could say, out there about what's going to happen with this Tesla situation. So obviously, if you didn't, haven't been following Tesla, Elon Musk last week tweeted out the whole short seller enrichment commission, basically trolling the SEC. But here's the problem with that. A judge handling the settlement has ordered Musk and the SEC to write a joint letter explaining why the court should approve the deal. This is not unusual for a judge to do that, but it leaves open the possibility she will reject the settlement, okay? The behavior at such a critical time suggests Tesla's board of directors may not be able to rein Musk in. The judge may have some real concerns that Tesla won't be able to do anything about Musk's tweets, and social media is difficult to pre-clear or to approve in advance unless he's willing to do so and cooperate. And obviously, the tweet that happened last week is not a good look for Elon Musk. It's not a good look for the Tesla board of directors and things like that. That in a serious situation like this, you're basically trolling the SEC. So we're in a situation now where, the fate is kind of in a judge's hands. The judge can say, okay, I approve this deal's good. Or the judge can say, no, I don't like this at all. I think you need a much harder punishment, Elon Musk. You obviously, haven't learned your lesson. You went and trolled them on Twitter, a few days after the settlement went through and whatnot. We don't have enough faith that you're going to do a good job as far as that goes. So right now, things are still up in the air. The settlement, between Musk and the SEC is kind of done, but it still needs to be approved by an actual judge, and we don't know what viewpoint that judge is going to have. So a lot of people are still looking at Tesla stock, and although the numbers are great, and there's some more good news came out today in regards to crash test ratings in regards to Teslas and whatnot, the Model 3 specifically, all that is great news. There's a lot of great news there, but this fear of what that judge will end up deciding is scaring a lot of people, that are involved with this stock right now. Because what if she goes ahead and says, Nope, I don't like this deal. Go back to the drawing board. What are we looking at that point in time? You know, she says, I want something much harder on Musk than what it is. You know, it's still got to go through this judge, guys. So that's where that one's scary. And I think that's why I dropped, another 4+% here today, all right? A lot of people selling out of their shares. To get Tesla to continue to move down like this, it's a lot of selling pressure on this stock. Maybe it ends here or maybe it continues lower. We'll have to see. NIO stock. So NIO stock, I have two reasons why this stock continues to drop. Although it wasn't in the news particularly, fell another 3.5+% today. This stock has been a disaster basically since the 2 days after the IPO. It topped out at $12+ a share, and that same day I put out that video, and now NIO stock is down 50% since I put out that video. And I think there are two parts why NIO stock continues to fall. One is Tesla stock's not doing good. Electric vehicle. You have NIO stock, another electric vehicle company. I think it's just not a good look for NIO stock. I think the excitement's not there right now. If Tesla stock was flying high right now, and everybody's just talking about the positive of electric cars and whatnot, maybe a lot more people jump into a NIO stock. But, right now it's not looking good, okay? The other part right now is with NIO stock, it's a Chinese company, okay? And not only is it a Chinese company, it's a Chinese company with no earnings right now, okay? So it puts it in the basket of people absolutely hate this stock. And it's part of the reason why I wanted to warn everybody that you could be, hurt ridiculously bad. Like any stock's a risk out there. But this one in particular with their no earnings and with everybody looking at the stock and saying no earnings, it's a Chinese company. Chinese stocks are hated right now. If you don't know, like pretty much every single Chinese stock out there is near its 52-week low or somewhere down there, down substantially over the past 3 to 6 months, okay? So when people are looking at this stock, they're like, whoa, why do I want a piece of that, okay? Why do I want a piece of NIO stock? So we'll have to see if things revive there. Tesla stock, I think, would have to start going up massively to start to get this one to go up, and people would have to stop, all the negativity around Chinese stocks right now. Like great Chinese companies like Tencent and Alibaba are stocks have been just free falling down. Never mind a stock that has no earnings like NIO stock that people are like, who knows about this company? Like if Tencent and Alibaba are falling, like imagine what that does for all the riskier stocks. That's why you get a stock like this that's down 50+% in 3 or 4 weeks, guys. It's absolutely ridiculous. So anyways, hope you guys enjoyed this. Hope you enjoyed that random live stream earlier today. Definitely check that out if you want. I think I'll have it as a pinned comment. Might even be the suggested video on this video. So anyways, thank you for watching, guys, and have a great day.